Hey, good morning, everyone. Happy Monday. Again, my name is Nick Palmer, owner and broker of Valor Mortgage here in Gilbert. And so, a couple little housekeeping items. So, doing this live platform to really just give you a very honest perspective as far as the mortgage industry and the Arizona housing market. So every Thursday, I am hosting a homebuyer webinar. Whether you're a first-time homebuyer or a second homebuyer, it's a webinar every Thursday at 6 p.m. I put the link to register in the comments, and you can register. So it's just allow you to get a little bit more information about the home buying process, and then from there you can dive a little bit deeper into strategies to make the mortgage financing a little bit better. So without further ado, let's jump into what's going on in the mortgage industry or the Arizona housing market. So last week we had the CPI report come back, or CPI data, which is a indicator of inflation. And inflation obviously slowed down, or it didn't come in as high as we thought it was going to be. And the reaction to that is interest rates dropped about 0.75%, 3/4 of a point. So we effectively went from a 7.3% down to about 6.3%. So what that means is that kind of what I've been saying every week is that interest rates are not based on the Federal Reserve or the Fed rate. It's based on inflation. Once inflation starts slowing down or starts reducing or taking a step back, that's when we'll see interest rates on mortgages come back down. Why? Because what happens is that you have investors, it's all based on the bond markets, the mortgage-backed security markets, and investors, when inflation is just running rampant and we don't know where it's going to go, a lot of them start holding cash. They don't invest it in bonds. They don't invest in the mortgage-backed security, so on and so forth. So as inflation starts slowing down, as it starts coming back down, we're going to see more of that money getting pushed back into the mortgage-backed security market, into the bond market, and that's going to help us with interest rates. All right, so where do we stand so far as interest rates? All right, so with a conventional 720 FICO, 5% down on a $600,000 purchase price, you're looking at 6.421 interest rate, 6.9 APR. Your estimated monthly payment is going to be $4,014, and the balance due at closing, or estimated balance due at closing, is going to be $36,524. With FHA 680 FICO, 3.5% down, you're looking at an interest rate of 5.967, APR 7.029. And with VA 680 FICO, no money down, funding fee is financed into the mortgage. We're looking at 5.893, APR 6.147. All of these interest rates are no points, no origination. A lot of the big companies you can go to right now are charging points, are charging origination just to get to these interest rates. We are, as a broker community, as mortgage brokers, we're able to offer these better rates just because we're not a big corporation. We don't have that overhead or that profit margin that we have to make on the loans with that. So interest rates are looking really good because of the new report that came out last week, and hopefully every single month that a similar report comes out, and we can continue that downward trend of interest rate and with that. So. All right, so moving on to our market. So pulling this report from the Arizona Association of Realtors. So listings, this is the October, as of October, the report from October. So listings, it's down from the previous month. Right now, statewide, we have 35,282. That is from last month, it's down, but a year-over change, it is an increase of 18%. You can see in October of 2019, we have 36,959, so just under 37,000. October of 2020, we had just under 33,000. And October of 21, we had 29,700. So right now, we have a good amount of listings or new listings hitting the market. But they're sitting on the market because people, one, don't know where the economy is going to be, interest rates, you name it. Those excuses, those rebuttals are out there. Sales, however, are down 40% year over year. As far as October, we had just under 7,000 sales. You can see October 2019, 2020, and 2021, we were between 11 and 14,000 in sales. And again, we are 40% down in sales year over year. What this does, though, is that there's no competition out there. And so what does this mean to you as a prospective buyer is that you have the ability to get out there and negotiate, right? First off, the budget has to fit, or the mortgage payment has to fit your budget, right? The best time to move is when you're ready to move. But with as many houses sitting on the market and the few buyers out there, you have the ability to go out there. I wouldn't say cherry pick, but you have the ability to look at several different homes and offer competitive offers and ask for seller credits. Every offer that I'm seeing each month has some sort of seller credit with it. And so people are getting seller credit, getting their closing costs paid for, and or using that money to buy down the interest rate. All right, median sales price, through the state of Arizona, 349,000. That is up year over year by 7.4%. And the big one too, inventory. We have 3.29 months of inventory. The Arizona Association of Realtors likes to see 6 months to have a balanced market. I think anywhere, if you get between 4 and 6, we're gonna have a balanced market. The problem is though, is that there's a lot of people sitting on the sidelines. And that 3.29 months of inventory is going to go really quick once everybody gets comfortable where the economy is heading. Maybe the interest rates come down a little bit more. Maybe home prices come down just a little bit more, or 2 of the 3 are put into place, and now we have a bunch of buyers that are going to hit the market. And so I think that 3.29 months of inventory is going to get gobbled up very quickly, and it's going to create I wouldn't say a super competitive market like we saw in 2020, 2021, but it is going to create somewhat of a competitive market. At different price points, it's going to be different, but it is going to create a competitive market to where you might see multiple offers. You may see at list price offers instead of just below list price, but maybe no seller credits. So it's just kind of gauging the market, and obviously it's always better to get into the market when there's less competition with that. So that's our Arizona housing market is looking good. It's just we're building inventory right now. Unfortunately, I think that we're still going to be undersupplied for a long time. Builders can't build fast enough, and we just have to have a good steady increase in demand with that. All right, so moving on to a program highlight. So one of the programs or loan programs that I want to highlight that a lot of people don't talk about or share with people is the affordable home or housing programs with Fannie Mae or Freddie Mac. Those programs are called Home Possible and Home Ready. The nice thing about these programs, one, it's a conventional loan program. So you get all the benefits of the mortgage insurance. With the government programs like FHA and USDA, the mortgage insurance is for the life of the loan. A quick caveat with that, if you put 10% or more down on FHA, it does drop off at 11 years, but you have to put 10% down. But with FHA and USDA, regardless of credit score, your mortgage insurance is set, right? It's typically at a little bit higher rate. With Fannie Mae's Home Ready and Freddie Mac's Home Possible, you do have mortgage insurance, but it's capped at a very low amount, and it's based off of your credit score. The nice thing about these programs is that you do not have to be a first-time home buyer. You can put 3% down. You get a slightly better interest rate than, say, a regular conventional loan. Your mortgage insurance is going to be much less, and there is no loan cap. The only drawback with these programs is that it's income-driven, and it's property or zip code specific. And generally here in the Maricopa County area and into Pinal, the max income limit is $71,100. So it's 80% of the area median income. So $71,100 is the income cap. So one borrower or 2 borrowers, they cannot exceed that $71,100 in total income. But it is a really good program, and it's actually a really good alternative to FHA if you have a good FICO score. A lot of people, even if they have good FICO scores, jump right into that FHA bucket. I like to show my clients, if they have a good FICO score, even if they don't, I like to show them that option. but it is a good option. If you have a good FICO score and you can meet the income limit, it's a much better program for several reasons. And I encourage you, when you are shopping for houses or shopping for mortgages, that this is something that you keep in mind. If you have more questions, shoot me an email, give me a call, or put it in the as a comment, and obviously that'll go directly to me, and I can answer your questions as they come in with that. So again, this is the Home Possible and Home Ready program. It's a conventional loan, but it's an affordable housing program through Fannie Mae and Freddie Mac. So, all right, guys, that's all I have today. A quick little update. I'll continue to come back every week with just a straight, direct update as far as where mortgage rates are at, where the housing market's at, and then obviously a highlight as far as how to make your mortgage financing a lot better. If you guys have any questions, you see the ticker down below. You can email me, nick@valormortgageaz.com, or you can give me a call, 480-773-2686. You guys have a good week. I'll talk to you soon.